As we pass the mid-year mark of 2014 and the sales tax holiday season is upon us, with more than 20 sales tax holidays currently scheduled from late July through the fall, it's time to take a look back at significant sales tax law developments occurring since the beginning of the year. On January 1st, sales tax on recreational marijuana went into effect in Colorado following voter approval of the levy in the November 2013 statewide election. Recreational marijuana is subject to the general Colorado sales tax rate of 2.9%, an additional 10% state sales tax, any local sales taxes, and a 15% excise tax on the wholesale price, whereas medical marijuana is only subject to the 2.9% general state sales tax rate plus any local sales taxes. More recently, in July, New York Governor Andrew Cuomo signed legislation making New York the 23rd state, in addition to the District of Columbia, to legalize medical marijuana. Effective July 5th, the state imposes a 7% excise tax on gross receipts from the sale of medical marijuana. This tax is imposed on registered organizations selling marijuana to qualified patients or caregivers. Finally, on July 8th, legal sales of recreational marijuana began in Washington state, making Washington the second state behind Colorado to legalize recreational marijuana and to impose tax. With respect to sales tax rates and the application of sales tax, a joint resolution was adopted in Missouri in May that proposes a constitutional amendment that would increase the state's 4.225% sales and use tax rate by 0.75% for a 10-year period for transportation and highway system purposes, subject to voter approval. Retail sales of food would be excluded from the increase. Voters will have the opportunity to decide the issue in the 2014 primary election on August 5th. If approved by voters, the increase would take effect on January 1st, 2015. Ohio became a full member of the Streamlined Sales and Use Tax Agreement at the beginning of the year on January 1st. The state had originally joined the agreement as an associate member in 2005. As a full member state, it has the power to vote on amendments to, or interpretations of, the SST agreement, and sellers registered under the agreement are required to collect tax on sales into Ohio. In other Ohio news, Ohio Governor John Kasich signed legislation in June providing that the state tax commissioner must notify taxpayers of tax or fee overpayments and issue a refund or apply the amount as a credit in the future. Regardless of whether a taxpayer files a refund claim or amended return, the commissioner must review taxpayer accounts not later than 60 days before the expiration of the period during which a taxpayer can file a refund application for a tax or fee. In sourcing news, effective as of July 1st, the sourcing of taxable services in Wyoming is determined by where the customer makes first use of the service after it is rendered. Previously, Wyoming sourced sales and use tax on services to the location where the service was performed. The change in sourcing was designed to bring Wyoming, an SST state, in line with other SST states. Also pertaining to sourcing, enacted Colorado legislation has postponed the effective date of a change in the law originally set to take effect on July 1st that would have amended the state's definition of retail sale to require sales tax to be calculated based on where the customer takes possession of the property rather than where the property was purchased, as is currently the case. This change in the retail sale definition is delayed contingent on the enactment of the Federal Marketplace Fairness Act. In Nexus news, whereas New Jersey enacted a click-through Nexus provision that applies as of July 1st, Indiana legislation containing click-through and affiliate Nexus provisions failed to pass the Indiana General Assembly by adjournment in March. Interestingly, the bill had been introduced days after online retailer Amazon.com began collecting Indiana sales tax on January 1st under an agreement reached in 2012. Also on July 1st, the Colorado Marketplace Fairness and Small Business Protection Act took effect, which outlines the kinds of business activities giving rise to a presumption that a member of a controlled group of corporations is doing business in Colorado, and describes the kinds of agreements or arrangements involving a person with physical presence in the state for which a person will be presumed to be doing business in the state. On the U.S. Supreme Court front, the High Court will hear a case, Direct Marketing Association versus Brohl, that raises a constitutional challenge to a Colorado law that imposes use tax notice and reporting requirements on out-of-state sellers who do not collect Colorado sales or use tax. On review, the court will look at the question of whether the Tax Injunction Act bars federal court jurisdiction over a case filed by non-taxpayers seeking to enjoin the notice and reporting requirements of a state law that does not impose a tax or require the collection of a tax, but merely acts as a secondary feature of state tax administration. And finally, the subject of virtual, digital, or cryptocurrency, known by names such as Bitcoin and Peercoin, is being addressed by the IRS and state departments of revenue as they provide taxpayers with guidance on how tax applies to transactions involving this exchange medium and how this form of payment is classified for tax purposes. The digital currency is a largely unregulated form of payment that is not associated with any country and is attractive to those concerned with privacy and transaction fees. In March, the IRS issued guidance classifying virtual currency for federal tax purposes not as actual currency or legal tender, but as property. Following the issuance of this guidance, the California State Board of Equalization issued guidance informing taxpayers that sales and use tax applies to transactions in which virtual currencies are accepted by businesses and individuals as payment. The Kentucky Department of Revenue advised taxpayers that a Kentucky business accepting Bitcoins as payment must convert them into U.S. dollars and charge Kentucky sales and use tax on the transaction if the transaction is subject to tax. And the Wisconsin Department of Revenue advised similarly, adding that the sale of the virtual currency itself is not subject to sales and use tax, but when a sale of virtual currency represents the sale of a specific taxable item or service, the sale is subject to Wisconsin sales tax as if it were the sale of the item or service. These are just some of the highlights in what turned out to be a very active first half of 2014 on the sales tax front. Moving forward, in addition to action on the Federal Marketplace Fairness Act, be on the lookout for a decision in the Direct Marketing Association case and guidance for more departments of revenue or even legislation on the sales tax treatment of virtual currency transactions. Bernita Ferdinand, CCH, Chicago.